ever feel like your business cash flow is more like a roller coaster than a steady stream? Today, we're diving into the most common cash flow surprises that catch business owners off guard. And more importantly, how they handle them like a pro. Stay tuned to learn how to turn your biggest cash flow challenges into opportunities for growth.
In a world where chaos seems to reign supreme, where uncertainty lurks around every corner, and financial markets are now more unpredictable than ever, there's one place you can turn to find clarity and control. Welcome to the Wealth Wisdom Financial Podcast.
Hey, I'm Brandon.
And I'm Amanda.
Join us as we dive deep in the world of personal and business finance
to assist you in navigating through the chaos and building the financial future you deserve.
We believe when conventional financial thinking doesn't get you where you want to go,
you need wealth wisdom.
So if you're ready to take control of your financial destiny,
tune in to the Wealth Wisdom Financial Podcast.
Because in a chaotic world, your money shouldn't be.
Subscribe now and never miss an episode.
Welcome back. In our last two episodes so far this year, we've covered building a business budget that actually works and how you have to totally redefine what budgeting is to do that. And then we covered the systems needed for scaling to 7 figures. Today, we're tackling one of the most crucial aspects of business success, managing cash flow, especially when things don't go as planned, which when do they ever really go as planned?
I don't know. Have you seen the past couple of years?
Right.
Nothing ever goes according to plan.
Yeah, things rarely do, for sure.
Here's the truth. Every successful business owner learns eventually. It's not the expected that derails your business. It's the unexpected. But here's the good news. Most unexpected cash flow situations follow predictable patterns. Once you know the patterns, you can actually prepare for them.
So let's look at some of the 5 most common cash flow surprises, and we'll talk about how to handle them. Sound good?
Yep.
Okay, here we go. The first one is the seasonal slump scenario. Revenue drops 30 to 50% during predictable slow periods. And every industry has its natural cycles, sometimes yearly, sometimes every few years, right? Sometimes the same week every month, right? If you haven't found those natural cycles yet, you will soon.
Yeah.
And the solution here is to calculate your minimum monthly operating expenses. You know that, right? How much it costs monthly to operate your business, okay? And during the peak seasons, set aside maybe 20% of your operating expense account for slow periods. If in doubt, add an account and profit first, right? You have your normal operating expenses and maybe you have a other account where this is my operating expenses for slower periods. And you take 20% of your operating expense account and you move it there during those peak seasons. And then you'll have the money to pay for the operations during the slower periods. And that's great. That might be all you need to do. But if you're like, but I also would love to keep revenue high during those slow times, then maybe consider developing counter seasonal offerings or services that don't distract from your core offerings and services. Here we'd say you got to go read The Pumpkin Plan by Mike Michalowicz to make sure before you're going to add a new product, offering, or service, you need to think about how it complements, not distracts from your current core offering or service.
Yeah, I think that was something for us in our coffee shop. It was we had polar vortex in winter. That would always happen, right? And people would be like, well, you just need to do more marketing. Like, well, people aren't leaving their houses.
Right.
So how's that going to help them? But what we had done was in winter, we would sell our memberships in January that would help alleviate some of those challenges in December by having a opportunity for people to be a part of the bigger program.
Yeah, we would also do more marketing around our catering services in the winter because people in businesses, close by wouldn't want to leave their business the middle of the day, during the meeting because it was so cold outside, but we were happy to deliver catering to them. And that really helped us a lot because most people think for a coffee shop, right, the slow season's the summer because nobody's drinking hot drinks, but When you have ice rinks, people love those during the summer. It was actually the winter that was the slower times,
Yep.
especially in Chicago, because just people weren't moving around as much.
Yep.
So it's kind of a couple things to get your juices flowing there. Now let's move on to the second one. This is the growth paradox problem. This is when sales are up, but cash flow is tighter than ever. Most people think more sales, more money, I've got more cash. That's often the opposite. Because growth often actually requires investment before you see the return on that investment. Many times, those returns never even materialize because you spent more to make them happen, right? There's more labor costs, or you had to upgrade your equipment, or whatever it might be. And so there went all the extra profit that you thought you were going to get from those extra sales. The solution here is to calculate the true cost of new clients or new projects, including the ramp up time, right? Or the cash value of money while you're waiting for the return on that money, and consider financing options before you need them. It's easier to say qualify for a loan when you don't actually need it. And it's almost impossible to qualify when you do. So even better though, consider how you might become your own source of business financing so you never have to rely on a bank or other lender again. A lot of times what cuts into, right, when sales go up but cash flow is tighter, it's because a lot of that extra went to a bank or a private money lender or somebody that gave you the money to get through it. If that interest was able to be paid to you, you had more control over how much interest is charged, all those kind of things, there go your profits. You actually get to keep them.
Yeah, which is kind of funny because whenever we do our business, people are like, oh, wait, you want to be your own bank? That seems a little weird. But yet we oftentimes will go to a bank all the time for the business needs, and we'll just go as much as we can and say, oh, I'll take whatever you can give me so I can keep my business going. And we don't realize that that's feeding or depleting our profits because we took it at 12% or whatever it was. Whereas if we have thought ahead of time, we could have become our own bank using the policies that we have set in place.
Yeah. And then the other idea here is, let's say you do take on a big customer, a large project. This is gonna, this is huge growth for you, but you don't get paid until later when you do projects. You got to put forth all this effort and then you get the paycheck later on down the road when the results are there, or when you get that deliverable in the door. Instead, consider how you might use milestone billing for those larger projects. Actually, under no circumstances, if at all possible, should you ever take on a project without having some kind of deposit, some kind of skin in the game from your customer, so that you've gotten at least a little bit, maybe cover some of those basic costs, reduce how much you have to go into debt, or the time value of money, you get a little bit then, and then milestones along the way where you get paid along the way rather than the big check later, which actually is a great segue into number 3 here, which is the delayed payment dilemma. Invoices are out, but cash is not coming in. People aren't paying their bills. You've got a huge accounts receivable and nobody's paying. And this is because your client payment terms don't match your expense timing. And you get into this delay and you need to go into debt knowing that this money is coming, or you have to delay payroll or delay paying yourself or whatever it might be. And that can be super stressful, super like a bad snowball to get into.
So sometimes, again, we talked about those money meetings, looking at your delayed payments system or whatever you have in place, read your fine print, what you put to the clients, so that way it is in your benefit as you go for the deals. Don't just chase private contracts or government contracts because the big ticket, but does your business and does what you want line up? And so making sure that fits, and hopefully the client will respect that.
Yeah. So here you can make some really simple changes, like implement a late fee policy and enforce it. You can offer early payment discounts, right? If you pay me by this day, I'll actually give you 10% off, or 1% off, whatever it might be. Like we talked about the last one, particularly for new clients, maybe require a deposit. I know when I work with an attorney, they often require a deposit for their retainer before they'll actually take me on as a client. Why not be like that? They do it. Why can't you? And then, of course, when you send out invoices, you're waiting for people to pay. Make sure there are lots of automated payment reminders that go out that you don't even have to think about, because you will, the more, the squeaky wheel gets the grease, right? Be
Yeah.
the squeaky wheel. They owe you money. They need to pay it. Make sure you get it paid.
Yeah, I think that is so important, those things. And once you've said it, then you can forget it, and then people pay you. You get money in the things in the whatever you call it.
Yeah.
Right.
Okay, so we went through 3 so far. We got 2 more. Thanks for sticking with us. The 4th one is the unexpected opportunity challenge. This is when a golden opportunity appears, but requires immediate cash. The best opportunities often come without warning, and you're like, oh, this is a great opportunity. Where am I going to find the money for it? And this is where maintaining an opportunity fund separate from your emergency savings can become really handy. This is where having some of those pre-approved financing options ready might be good, or having a strong banking relationship before you need it, particularly with a local credit union. They're often the ones doing the investments in local businesses. And even better yet, stashing up your vaults where you can be your own source of financing without having to rely on others. Go back 2 episodes if you need a refresher of what that is.
Or all of our episodes, most of them, I think we talk about, using the system, the banking yourself system often. And this is how we've been able to take advantage of some great opportunities and unfortunately deal with challenges too.
Yeah. And then my favorite thing, besides having the money available for this, is to have a quick decision framework for evaluating opportunities. Because when a golden opportunity comes your way, you have to decide really quickly whether it's truly golden or if it's fool's gold.
Yeah.
This is like pre-deciding what opportunities fit with you and what opportunities don't, so that you don't rush ahead too quickly. You just have to get the framework out and use it, right? Oh, I got a golden opportunity potential. I'm going to get out my framework. I'm going to see how it does with my framework before deciding to move forward. Now, don't go be like one of those characters from a movie that is trying to find their soulmate, and they have a list of 100 qualities no other human being could ever reach, right? The best frameworks in this decision-making framework have about 10 or less criteria. And when you come up with a golden opportunity, you want them to match a minimum of, say, 50% or more for that criteria, for that to satisfy whether you move forward or not. Do not make a Prince Charming list and expect every opportunity to match 100% in order to move forward. Because then you probably won't have any opportunities, just like that person that has that list stays single for their lives, right? But once they get more clarity on what is really true, what's really effective, then you can make sure you've got the money set aside for it, or the financing available, or whatever it might be. And then you've got the framework. And like they say, those who have the money, opportunities find them.
And on the flip side, I do want to make sure there is a lot of fool's gold out there, a lot more. And so making sure, trusting, but verifying, doing the due diligence, having that list again is helpful. You can't have it like so long, but making sure you're not going to get in some kind of Bernie Madoff situation or some other crazy thing, because there's a lot out there. So talking to somebody like us or other people that trust to vet the idea, because sometimes we go in there with those rose-colored glasses saying, oh, this is going to be great, and then
it's
it
not.
might not.
Yeah. And that's actually one of the great things. One of those criteria could be, I have shared about this opportunity with this person and they agree it's also a good opportunity. Yep. Okay, now the final one before we get to some objections, the tech upgrade trap. This is when critical systems need immediate updating. And technology evolves faster and faster, and especially faster than our budgets often. And we have to, upgrade those laptops, upgrade, this piece of equipment, whatever it might be, in order to move forward with our business. And this is where we want to create a technology replacement schedule. I know, like when I buy a MacBook, it's going to last for years and years, way better than a PC. Sorry, all you PC lovers. But I know eventually I'm going to need to replace it. And having a set schedule on that so that my Mac doesn't keep running slower and slower and slower, and I get less and less efficient. But I know, oh, this is when I'm replacing it. I've got the money set aside. Let's go. And you might set aside a percentage of those operating expenses for it. What percent? A higher one if you have a tech heavy business, a lower one if you're less tech dependent, right? You set your percentage, you can always adjust it. And as you go, with what actually happens. And then always, also remember, you don't always have to upgrade the equipment. Consider subscription-based alternatives. I did this once when I worked in an office during college, is we had a copier subscription. We didn't own the copier, we leased it, and we paid for toner and ink as we had it. And that was way better when the copier broke, because they're prone to breaking, because then we could just call somebody and they could come and fix it. Nobody on the team had to have the knowledge and the expertise to do that. This is one of the best lessons we learned in our coffee shop. We had another business owner close by that told us, don't ever buy an ice machine, lease it, because they break so often and the maintenance costs are way too high. Make sure you lease it, and then you'll get that maintenance included, and it's well worth it. So,
which we learned after the fact of buying
we bought one first. Yeah. Learned the hard way. And then also, this is one tiny little trick that might save you lots of money. Plan your upgrades during high cash months, right? If you've got those business cycles, do the upgrade during the higher months, or maybe when tech is often on sale, right? The end of the year, there might be, Black Friday deals or those kind of things. That's when you upgrade, rather than, during February when there's no deals going on.
Yep.
Yeah. Okay, stick with us after this slight commercial break, where we'll talk about the objections and the flip side of the story.
Ready to take the next step towards securing your financial future? Whether you're planning for retirement, saving for your dream home, or you just want to make your money work harder for you, the team at Wealth Wisdom Financial are ready to assist you. And now, it's easier than ever to see how we might give you a boost on your financial journey.
Schedule a 15-minute discovery call with one of us today.
And let's discuss your questions and your financial goals together.
Don't wait any longer. Your financial freedom awaits. Schedule your discovery call at www.wealthwisdomfp.com/call.
Now, I know what some of you are thinking. This all sounds great, but I can barely keep up with regular expenses, let alone save for all these scenarios. Others might be wondering, isn't that just paranoid planning? Can I deal with the problems as they come?
Yeah, so let's talk about these. Let's start with I can't afford to save for everything. Well, start small. Even 1% of operating expenses in an opportunity fund or a tech upgrade fund is better than having nothing there when you get there. And prioritize too, based on your industry's most common challenges. Maybe equipment is a bigger challenge, whereas opportunities are less. You've got your bread and butter, and you're gonna keep with those bread and butter offerings. Great, right? Prioritize based on what's most common for you. And remember, the cost of not being prepared is usually higher than the cost of preparing.
So I want to say that again. The cost of not being prepared is usually higher than the cost of preparing. Now, as we talk to people all the time, they often say, I just don't have the time. I'm too busy. I'm this and that. And then life happens. Right. And we see it on a hard level oftentimes, but being prepared, being aware, having the knowledge about your finances will help you save a lot of money, and it'll help you grow, because not only is it going to help you save, but you're able to deploy in a right way. So this, again, I think about this a lot in the probate world, where people have never planned, didn't do anything, and then they are left with an extreme cost, or taxes, or other things that happen. So don't be that guy or girl. Be proactive in your own journey. Don't be reactive, which is honestly what the world is.
Yeah. And start small, do what you can, and keep growing from there. The other thing is, people say, well, this sounds like too many separate funds. And this is where you need a budget. YNAB comes in handy, like we talked about 2 episodes ago, where we have our operating expense account at our credit union, but then we have categories within that account where we can break things out, rather than having 10 different bank accounts just for operating expenses. But as your business grows, right, keep in mind the profit first adage: when in doubt, add an account. Okay. that might be needed as, technology, you're going to need more and more for it, or you want to make sure that it's not touched, right, when operating expenses come up, things like that. The key is to have the money available when needed, do whatever works for you, and adjust as you grow and as you have the opportunity for more things. Okay. And then third is this, I prefer to be more spontaneous and flexible. I don't want to have all this rigidity. Whereas I think these systems that we're talking about actually give you more flexibility when opportunities arise. Being prepared doesn't mean being rigid. Being prepared means you can actually flex. You have the ability to flex and to be spontaneous, when that opportunity comes your way or when that tech upgrade is really needed. Think of it as buying yourself future options. You usually have more options the more money you keep available, not fewer.
I think this, again, is one of those false things that people say, like, oh, I'm going to be more, I'm not going to be as flexible or spontaneous. But then again, in the end, we have less flexibility and spontaneity because of the things we've done in the early years.
Yeah, and or the things we haven't been prepared for.
Yeah.
Yep. So remember, all the things we're talking about today, the goal isn't to predict every possible cash flow challenge. It's to build some systems that help you handle whatever comes your way. You might implement seasonal adjustment strategies, growth funding systems, payment managing processes, opportunity funds, technology planning. Pick one, see what you might move forward. And by doing that, you're not just managing cash flow, you're creating a foundation for sustainable business growth. So we're talking about all month long. We're talking about budgeting. We're talking about systems with money meetings and so forth. And here, when we're talking about preparing for cash flow crunches, these systems give you the confidence to make bold moves when opportunities arrive, while also protecting your business during challenging times. It's not about preventing every cash flow surprise. It's about being prepared to handle them when they come.
Yeah. And again, one of our friends, Perry Marshall, says more black swan events are going to happen, more things that are outside of our control. So to be able to have that plan in place, whether it's a good event or a bad event, there will be more. So be prepared for that.
Yeah. And so one of the most powerful cash flow management tools we have is that pre-decision framework we talked about earlier. This pre-decision framework is a list of 10 items that we must answer a simple true or false for. And the more of these, when we bring this decision, the more trues there are, the more likely it's going to be beneficial and we're going to move forward. The less trues, the more falses, then the more likely it's going to be a waste of time and money. Our pre-decision framework is available for all premium members of the Wealth Wisdom financial community. To visit wealthwisdomfp.com/community to join today and get instant access to this resource and so much more. If you're ready to spend 3 minutes making a powerful decision rather than 3 weeks going back and forth until the deal falls through and you lost the good opportunity, then you want to get our pre-decision framework in the community today. Join at wealthwisdomfp.com/community.
I mean, I need that thing. I mean, we use it. So yeah. Thanks for joining us. Don't forget, hit that subscribe button and live long and profit. Remember, the topics presented in this podcast are for general information only and not for the purpose of providing legal, accounting, or investment advice. And live long and profit. Is that how we do it?
Oh, you forgot to say, on such matters, please consult a professional who knows your specific situation.
There you go. Don't forget, like, subscribe, and leave a review.